Good afternoon. This public witness hearing will come to order. We're pleased to welcome you all to the Public Witness Hearing Day. I believe the appropriation process benefits tremendously from direct civic engagement and input from stakeholders such as yourselves. Our public witnesses represent a wide array of backgrounds and expertise, the important issues covered in the FSGG bill. These testimonies help us assess the effectiveness and impact of our work here in Congress, analyze the best way to serve our constituents and the country. Many of the programs and agencies in this bill have a direct impact on the lives and communities of Americans. The testimony each of you shares with us today stands to expand this committee's perspective as we strive to be responsible stewards of the American tax dollar. With that, I welcome all of our witnesses to the subcommittee and remind them to please limit their remarks to 5 minutes. The ranking Mr. Graves. Ranking member, Mr. Graves.
Thank you, Mr. Chairman. Thank you for holding this public witness hearing. It's great to have the opportunity to hear from the American people, come before our committee and share with us what your priorities are. That's as the representative body here and being a reflection of the voices of our districts and constituencies. It's good to have folks here. So, Mr. Chairman, thanks for doing this, and happy to yield back and look forward to the hearing.
Thank you. Our first witness is General Arthur T. Dean, Chairman and CEO of the Community Anti-Drug Coalition of America. Please step forward.
Chairman Quigley, Ranking Member Mr. Graves, and other distinguished members of the Financial Service and General Government Appropriations Subcommittee. I thank you for the opportunity to testify before you today on behalf of Community Anti-Drug Coalitions of America, CATCA, which is a national association composed of more than 5,000 community coalitions nationwide. I've had the honor and the opportunity to serve as CATCA's CEO and board chair for the last 20 years. CATCA strongly supports the funding of the DFC program in 2020 at the highest possible level, at a minimum of $100 million in the FY 2020, which was the final appropriation that the program had in 2019. And CATCA strongly supports that you let the DFC program and the HIDA program remain intact in the Office of National Drug Control Policy, ONDCP. We also ask that you include a minimum of $2 million to continue the National Community Anti-Drug Coalition Institute, known as the Institute, which provides all the specialized training and required training and technical assistance for the DFC program. Additionally, CATCA opposes the President's fiscal year 2020 request to dramatically reduce the salaries and the expenses in the Office of National Drug Control Policy. We believe that the proposal will weaken these vital programs and significantly impact ONDC's ability to carry out their mission in an effective and efficient manner. The DFC program is a tremendous example of how a very small investment of federal funds can achieve a major impact at the community level. DFC's coalitions are only provided up to $125,000 a year, and they must provide a dollar-for-dollar match, cash or in kind, for every federal dollar received. They must reduce youth substance use through the involvement of the required 12 sectors in the community that must be a part of their coalition. In addition, all Year 1 coalitions are required to go through a year-long training, and that training is provided by CATCA's Institute and provides them the necessary training they need to be successful. ONDCP's policy-level oversight has directly caused the DFC program to obtain exceptional positive results in reducing rates of all substance use for youth. I know from both my experience traveling the country as well as the national evaluation of this program that significant results have been obtained throughout the country. Just some quick examples. Chairman Quigley, in your district, the DuPage County Prevention Team in your district is a great example of a successful coalition. The leadership there, after 4 years of receiving DFC funding and receiving the required year-long training from the Institute, has attained the following results that I would like to share with you very quickly. past 30-day use reductions in 12th grades from 2014 to 2018. Binge drinking decreased at a rate of 28%. Alcohol use decreased at a rate of 13.3%. Prescription drug use, misuse, decreased at a rate of 40%. Ranking Member Graves, I want to talk quickly about Floyd Against Drugs. The DFC-funded coalition in your district working in Rome has also achieved some outstanding results as well. In a very short period of time, only talking about a one-year span from 2016 to 2017, they have reduced past month marijuana use at a rate of 20.6%, alcohol use at a rate of 17.1%. And quickly, the final example I want to share with you is a county in Kentucky called Carter County. In the early 2000s, some local school and faith-based leaders noticed that prescription drug abuse had skyrocketed and that it had infiltrated into the school system. They developed a coalition, they obtained a grant, they were trained by CATCA, and this is what happened as a result of that. They reduced 30-day prescription drug use misuse rates for 8th graders, 10th graders, and 12th graders. The 10th graders' 30-day prevalent decrease from 12% in 2006 to 1% in 2016. At the same time, college and career readiness scores rose from 23% in 2010 to 76.5%, and graduation rates rose from 81% in that county to 98.8%. I submit to you that the Drug-Free Communities Program is truly the backbone of a successful community-based substance use prevention. Therefore, we at CATCA strongly recommend that you keep DFC and HIDA in ONDCP and you fund them at the highest possible level in 2020. And I thank you for the opportunity to share this information with you and stand ready to answer any questions you might have.
I'll start with Chairman Graves, Ranking Member Graves.
Hey, Mr. Chairman, General Dean, thanks for being here and just for your commitment to safer, healthier communities and for your investment in young folks' lives. I mean, I mean, I know you've served in so many different capacities throughout your careers, but that's probably one of your greatest accomplishments, I imagine, as you look back and you recite some of these statistics. So thank you for that. Thank you for, as the chairman pointed out to me, your involvement even in the Atlanta community and the Boy Scouts there. So you've done great work. Thank you. Thanks for being here today.
Thank you very much.
No questions.
Well, I want to join the ranking member in thanking you for your service for the U.S. Army, the United States of America, and working to keep our communities drug-free. We're proud of what you're doing. We will do our best in this appropriation bills to appropriately fund those programs that you talked about. And your testimony is additional boost to our efforts in understanding these issues and promoting them and doing the best we can. So thank you so much for your service. We appreciate your having been here today.
Well, thank you for the opportunity, and it's been my pleasure. Thank you.
Thank you. Gotcha. Our next witness is Daniel Schuman, Policy Director, Demand Progress.
It's a pleasure to be back. Mr. Chairman, Mr. Ranking Member, Representative Torres, thank you for the opportunity to testify. I'm here to discuss federal spending transparency, which I know is always of interest to this committee. But I actually want to start first by commending the committee providing the public with this opportunity to testify. Public witness testimony provides an additional measure of transparency and accountability as Congress conducts oversight of the executive branch. Chairman Quigley, I know that transparency is a watchword for you, and I know for Congressman Graves, there can be no doubt of his dedication to making Congress work better. I'd like to thank you both for that. Let me briefly turn and outline an issue that would bring improved transparency and accountability to federal spending. Each year, federal agencies submit plain English explanations to Congress concerning their requests for appropriated funds. Unlike other budget documents, these congressional budget justifications use language that most people can actually understand, and they describe in useful detail each agency's programs and activities so you can actually get a sense of what they intend to do. The Office of Management and Budget approves the contents of these congressional budget justifications before they're submitted to Congress, and OMB also requires agencies to publish them online within 2 weeks of submission. While this process seemingly would provide for transparency and accountability, unfortunately it does not. My colleague Amelia Strauss and I looked at 456 agencies to see whether they published their congressional budget justifications online. We found that 21% of them did not publish these justifications online. In addition, 6.1% of these agencies published a justification online for 2018 or for 2019, but not for both. Now, OMB does not release a list of all the agencies that must submit congressional budget justifications. We don't know if our survey of all 456 agencies counted the right agencies, but it seems likely that the agencies that published only 1 year's justification failed to meet their obligations. And it's also likely that there's a lot of missing justifications. Now, right now, there's no way to know which agencies must publish a congressional budget justification, and there's no easy way to know where they can be found. This impedes both your ability and our ability to understand how agencies intend to spend these funds. We suggest a straightforward approach to addressing both of these problems. OMB, which already approves all executive branch congressional budget justifications, should publish all of them on OMB's website, right alongside all the other budget information that they already publish. This is not a new idea. In fact, it's probably familiar to members of this committee because you encouraged OMB to publish the congressional budget justifications on their website in your report language accompanying the 2018 and 2019 appropriations bills. And Mr. Quigley, I remember back in 2014 when you asked the then OMB administrator about this issue as well, and at the time she wasn't able to give you a satisfactory answer, which is why I'm back before you again on this topic. So what we respectfully urge the committee to do is to require OMB to publish all congressional budget justifications on their website. Requiring OMB to publish all the justifications in one place would make it easier for congressional staff and for the public to find these documents. It would be an important step towards improving transparency and accountability around federal spending. Now, we submitted draft legislative language in our written testimony. We hope that you'll consider it, and I am very appreciative of your making the time for me to come and testify today. So thank you.
Thank you for being here. Is there another way this could be done? I mean, besides putting it on there, if the statute's dictated? In a perfect world, the justifications would be where?
On a central website. So either OMB can publish it alongside all the other budget information they already publish, because they publish the actual budget, they publish the appendix, they publish statistics. There's a whole sort of slew of materials they have on their website. Ideally, this would be right alongside that. If you can't publish it there, the next best place would probably be to give it to GPO, since GPO acts as a repository of all federal documents, and that would be a reasonable place for it to exist. Appropriators could do this themselves as well, like Congress itself could have a website where you do this type of work, but it would be harder to do. OMB is already telling the agencies to publish them online on their websites and to go through a process to make sure that what's published is appropriate, and OMB already has the final documents. Since they already have it all, it makes sense, for, at least from my perspective, for them to publish it themselves.
Yeah, and that's why I asked the question. Thank you. Mr. Amade?
Thanks, Mr. Chairman. Daniel, if I heard your testimony correct, which we'll find out in a second here, is it already a requirement that this be available?
Yes.
Did you say that?
That's right. OMB requires all of the agencies to publish the congressional budget justifications on their websites within 2 weeks of submitting them to Congress. So they're already required to be publicly available. Ironically, OMB is one of the agencies that does not publish its own congressional budget justification online, which is kind of a thing, kind of an interesting fact.
Thank you for putting it delicately. I yield back.
Thank you so much for being here, sir. We appreciate your work.
My pleasure. Thank you.
Sure. Take care. Our next witness is Rachel Weintraub, Legislative Director and General Counsel, Consumer Federation of America.
Chairman Quigley and Representative Amadei. I'm Rachel Weintraub, Legislative Director and General Counsel for Consumer Federation of America. CFA is an association of nearly 300 nonprofit consumer organizations across the United States that was founded in 1968 to advance the consumer interest through education, advocacy, and research. CFA very much appreciates the opportunity to testify before you today, and today I will focus primarily on the Consumer Product Safety Commission, the Consumer Financial Protection Bureau, and the Securities and Exchange Commission. CFA strongly urges the House Appropriations Subcommittee on Financial Services and General Government to significantly increase funding for the U.S. Consumer Product Safety Commission in FY 2020, and to reject the inclusion of any policy riders that would undermine essential protections for consumers. The CPSC has a critical mission to protect the public from risks associated with consumer products, but its funding and staffing levels are insufficient to carry out the work necessary to fulfill this mission. The scope of work is enormous. The CPSC reviews about 8,000 unintentional product-related death certificates each year, is aware of at least 15.5 million emergency department-treated injuries per year associated with consumer products. In addition, the societal costs of consumer product incidents amount to more than $1 trillion annually. We urge you to significantly increase the CPSC's funding above the FY 2019 enacted level of $127 million. CPSC's budget is less than its first budget in 1974, when Congress appropriated $175 million in today's dollars, accounting for inflation. The agency then had 786 full-time employees and now has 539 during the current fiscal year. CPSC's budget also falls short of the general authorization of appropriations as passed in the Bipartisan Consumer Product Safety Improvement Act of 2008. Under this language, the appropriations level for CPSC in 2014 was authorized to be over $136 million. Unfortunately, the FY 2020 level of $127 million is obviously $9 million less than that authorization for the CPSC 5 years earlier. In Appendix A of the CPSC's fiscal year 2020 performance budget request to Congress, a list of unfunded priorities previously submitted by the Commission was included. This list includes pay inflation, non-pay inflation, expansion of data analysis, including exposure surveys and market scans, urgent care centers pilot programs, e-commerce, retailer reporting, IT systems and security, including incremental systems modernization, which includes an important consumer reporting database, saferproducts.gov, IT security, and Virginia Graham Baker Pool and Spa Safety Act grant program. The total cost of these unfunded priorities totals $8 million, but the Commission needs significantly more resources to conduct research and finalize rulemaking to address emerging and documented hazards and establish necessary mandatory standards for chronic and acute hazards associated with consumer products. The Consumer Financial Protection Bureau has proven itself to be a transparent, deliberative, and data-driven agency. The CFPB has worked closely with consumers and the financial services industry to develop sensible safeguards against harmful and discriminatory products and practices, has returned $12.4 billion in relief to more than 31 million harmed consumers, and the agency's authority, structure, and independent funding must be preserved. The CFPB's independent rulemaking authority should not be limited by establishing an unprecedented congressional review and approval authority over CFPB rulemakings. This agency is critical to protecting consumers in the financial marketplace, and we oppose policy riders that have been proposed in the past that limit the CFPB's ability to fulfill its consumer protection mission. The Securities and Exchange Commission, which is tasked with overseeing our nation's capital markets, has had a growing workload in recent years, but has not been provided sufficient resources to keep pace with that workload. This is particularly the case with regard to investment advisor oversight. In addition, funding long-term capital investments in information technology poses a significant challenge for the agency, which could and should be addressed by retaining the SEC's reserve fund. According to the SEC, its reserve fund has been critically important in their efforts to keep pace with the rapid technology advancements occurring in their regulatory areas, as well as meeting the challenges of cybersecurity. Without access to these funds and the ability to make technology upgrades, however, the SEC will be at a continued disadvantage relative to industry. Constantly struggling to detect wrongdoing will ultimately hinder the agency's ability to protect investors, foster market integrity, and promote capital formation. Thank you very much for your consideration.
Thank you. I appreciate your we appreciate your testimony. Focusing on just the Consumer Product Safety Commission for a moment. I understand the areas that you're talking about of unfunded priorities. Is your research detailed the type of workers they've lost that they need most or are short of?
There's definitely
Researchers and...
I mean, I think it's across the entire staff, and there's definitely been a discussion of a brain drain of knowledgeable, experienced staffers who are leaving, and I really think it's across all of their substantive areas.
And to the extent that you're aware, how often do they use, to what extent do they use outside experts to analyze the information they're dealing with?
I think it really depends on their budget and what money they have to contract with others. It does happen, but depends on the issue and the financial appropriation to that particular issue.
I appreciate that. Mr. Amadei?
Thank you, Mr. Chair. I yield back. Oh,
Thank
Mr.
you.
Chairman, and by the way, thanks for pronouncing my last name better than I usually do. I appreciate it.
I listened very carefully. Thank you.
Our next witness is Kel McClanahan, Executive Director of the National Security Counselors.
Thank you for having me here. My firm, NSC, is a public interest law firm that deals primarily in information privacy law and federal employment law, especially when it pertains to the intelligence community. I'm here with two relatively narrow asks pertaining to what should be non-controversial ideas. Transparency litigation should be transparent, and inspectors general should be independent. On the first issue, I want to explain how federal Freedom of Information Act litigation works in any great detail, because I presume everyone here is familiar with the process. I'm here instead to talk about the exception to the rule. Simply put, sometimes an agency tells a judge that it can't prove its case publicly. In those cases, it attempts to file a declaration ex parte and in camera so that only the judge can read it, not the other parties. There's a time and place for this, but this is greatly abused, and judges almost never deny it. In fact, in my research, I've only been able to identify 3 instances since 1994 where a judge denied one of these motions. In the worst cases, all that the requester sees is a statement from the agency saying that FOIA is good and FOIA should be yield the release of documents, and then something like the in-camera declaration submitted with this motion will explain the rest. In one such case, the judge ruled not only that FBI's in-camera declaration was proper, but that the requester, my client, did not even deserve a chance to file an opposition brief because, quote, the evidence presented in camera was so conclusive as to the questions presented that further briefing and argument was clearly unnecessary. Bizarrely, the judge also observed that the unredacted declaration is the quintessence of bureaucratic obfuscation and that he thought of George Orwell, quote, while attempting to decipher its meaning. Nevertheless, despite this indictment, he ruled in the FBI's favor. A preliminary analysis of publicly available FOIA court dockets since 1994 shows that these filings have steadily increased over 350% in the past 27 years, and yet, as noted before, I could only find 3 instances of judges denying them. Additionally, my personal experience has shown that agencies are increasingly including information in these declarations that does not need to be kept secret, as evidenced by the simple fact that I have been able to get redacted versions through my own FOIA requests. Many of these filings are historically important and newsworthy. For instance, I obtained a declaration which had been sealed since 1982, which provided information about the NSA's ability to intercept records about the Kennedy assassination. But historians and reporters should not have to rely on someone like me, who has nothing better to do than chase after these records. These records, which often pertain to information later released through FOIA, should automatically become public after a certain time period. But I'm not here to ask for that. Right now, we just need data on the problem. So our ask is simple. Please appropriate sufficient funds to the Administrative Office of the U.S. Courts to conduct a comprehensive survey of all such in-camera declarations in the last 10 years or so. Find out how many there are and in what circumstances they are filed and anything else relevant to the issue. And also specify that using this information, the Administrative Office should conduct a feasibility study for a process in which all such declarations would automatically be filed on the public record after 5 years or so, unless the agency convinces a court at the time that they warrant continued secrecy, like the automatic declassification review process for classified documents. The second issue is pretty simple. Inspectors general are supposed to be independent, but they're often not. This problem often arises in the context of IT and information access. When an IG's office relies upon the agency's IT infrastructure, it creates vulnerabilities and conflicts of interest. Consider Dan Meyer, the former head of whistleblower protection at the Intelligence Community Inspector General. CIA intercepted his emails to and from Senator Grassley for the simple reason that the ICIG uses CIA email servers. And CIA claims the right to read anything on a CIA computer, quote, for counterintelligence purposes. As a result, an operational office of CIA is given virtually unlimited access to the confidential whistleblower files of the Inspector General charged with its oversight. Contrast this with DHS and GSA. DHS OIG possesses its own dedicated IT staff and has established numerous firewalls and protocols to ensure that its files cannot be accessed by non-OIG personnel. The GSA OIG even has a separate domain, gsaig.gov. Same as before, the ask is simple. Congressman Connolly is already working with the Council. Can I continue? Is already working with the Council of the Inspectors General on Integrity and Efficiency to attempt to survey OIGs to understand whether DHS and GSA are the norm or if more OIGs are captured like CIA and the ICIG. But they need support, so we're asking you to appropriate sufficient funds to allow them to do this, and more importantly, to prohibit the use of appropriated funds by any agency to obstruct or refuse to cooperate with this survey. Thank you.
Thank you for your testimony and your suggestions. Just a detail, you're talking about the fact that these should automatically become public record unless the agency can justify this. Obviously, there's a spectrum here of how important some of this, and some of this is really important to keep public, not public. Correct? I mean, you would agree that there's some information out there that would span more than 5 years that's particularly important to keep classified.
Oh,
correct?
yes, Your Honor. Sorry.
Yeah.
Yes, Chairman. This is simply, right now, questions like this are things that we would hope the study would
And who do you think should complete the study?
I think the Administrative Office of U.S. Courts is best placed to it because they have the best accessibility to the records.
Okay, and has anyone else written on this besides yourself or discussed this, groups?
Well,
To the extent you're aware, if you could pass that on to the committee, we'd appreciate it.
Certainly.
Okay. Mr. Amade.
Thanks, Mr. Chairman. When you were talking about the hearings and you referred to the judges at the first part of your testimony, were you referring to federal district court judges or administrative law judges in the federal system? What judges were you, or maybe both, I don't know.
Well, no, administrative law judges don't generally play much of a role in FOIA cases. I was talking about federal district court judges.
Okay. So the in-camera examples that you provided the committee were an example where those happened in a federal district court judge's chambers?
Well, in a courtroom, but yes, a federal district judge did issue the acceptance or the denial of the motion. And in most cases, actually, the agency doesn't even ask leave to file something in camera, it just does it. And if the judge is pressed on it, they generally say, okay, I'll allow it after the fact.
Okay, Thank you, Mr. Chairman.
Thank you. Sir, thank you for your testimony.
Thank you very
Appreciate
much.
it. Our next witness is Bartlett Collins Naylor, Financial Policy Advocate, Congress Watch Public Citizen. It's good to be a public citizen.
Mr. Chairman, Member Amade, thank you for having me. My name is Bart Naylor. I'm the Financial Policy Advocate for Public Citizen. We're a half-century-old group composed of about 500,000 members and supporters. I'm here to urge you in two categories. One category is things not to do, and one category is things that I urge you to advance on. And one of them is that this committee has originated legislation in the past that carried riders that stifled what we think were important reforms, such as a reform to require companies under the auspices of the Securities and Exchange Commission to disclose political spending. It's an initiative that's supported by something like 1.2 million investors. This committee has carried a rider that has stifled the IRS from drawing a bright line around what nonprofits can do in a political way. It has stifled needed reform at the Consumer Protection Agency that deals with off-road vehicle safety. We urge this committee to not carry these riders, to allow these agencies to continue in these needed areas of reform. We also urge you to fund the various agencies under your portfolio to do the jobs that Congress has mandated them to do. Mr. Chair, you were earlier in your tenure overseeing some of the financial crisis response, TARP and so forth. I think it's sadly revealing that some of the statutes that you authorized regarding executive compensation have been left unattended by the regulators, in particular the Securities and Exchange Commission. What caused the crash? Why did bankers crash the global economy? Well, they were paid to do it. Take two firms, Bear Stearns and Lehman Brothers. If you count the compensation of the top 5 officers of those two companies, that's 10 in all, over the 8 or so years leading to the crash, they were paid $140 million each, $140 million each. Both of those firms failed, one in official bankruptcy, one absorbed with government funding into another bank. $140 million to crash their companies. There are 2,000 people at J.P. Morgan that make more than $1 million a year, and those employees are overseeing misconduct, that rap sheet that fills many pages. Congress understood that money was the root of the problem, and it passed a number of provisions in Dodd-Frank Title IX. Only a few of them have been implemented. The most important ones have not been. 953 is a simple provision that simply asks the relationship of the board's decision to make payments to senior officers and what performance metric they're using. J.P. Morgan spends roughly 15 pages explaining why Jamie Dimon deserves $30 million, but nowhere is it concrete. Nowhere can an investor see, well, I can tell that if revenue goes up by this amount or customer base goes this amount, he's going to be paid. It's simply 15 pages of flattery. What is needed is that 953A be brought to the finish line. 954 is a clawback. It says that if you actually have results that are based on fake results, erroneous results, that money be clawed back. And that the policy be stated, and that ideally that the public understand that. We don't understand that as the public or as shareholders. Wells Fargo has told us they've clawed back some of the money from some of the people accountable for the misconduct, but not much of it. The J.P. Morgan has explained some of the clawbacks from the London whale perpetrators, but not much. So in other words, even shareholders, even people that own the company are not aware of when the money is clawed back. And this is not chump change. This is something like 2% of corporate profits are going to senior pay. Then finally, and most seriously, 956 languishes. That's the most important provision that says that there can't be payment, excessive payment for inappropriate risk-taking. This has been languishing at the SEC. Next, when Chair Clayton appears before you, I would urge you to ask him what he's doing about this. Thank you.
In your written testimony, you talked a little about the IRS.
Yes, I'm the former Chief of Investigation for the Senate Banking Committee, so I am skillful enough to say that that is an area outside my expertise, and I'll have to get back to you with a follow-up question on the Bright Lines project. My colleague, Emily Peterson-Cason, can help you with that.
Okay, and if you could pass that information on to the committee in terms of our interest in that and getting more input from the public. I appreciate that. Mr. Amade.
Thanks, Mr. Chairman. I yield back.
Thank you, sir, for your testimony and for your work.
Thank you.
Our next witness, Jackie Simon, Director of Policy, American Federation of Government Employees.
Thank you for the opportunity to testify. I'll focus on 3 issues today: federal pay, the outsourcing of federal government work to private contractors, and the proposed acquisition of OPM by GSA. Federal pay is extremely important to federal employees for obvious reasons, but it should be important to everyone because how federal employees are paid, as well as how much federal employees are paid, is important to the maintenance of an apolitical civil service. Opponents of government and government employees often hurl unfounded insults against the federal pay system. They work hard to undermine trust in the numbers and try in various ways to argue that it needs replacing. The truth is that the federal pay system is extremely well designed, and its only real problem is that it's never been properly funded. Federal pay systems share 2 important characteristics. They're market-based, and they assign pay according to the duties and responsibilities of the job, not the characteristics of the individual who holds the job. As a result, there's very little discrimination in pay in the federal government. According to the most recent study by OPM, women earn 95.6% of what men earn in the federal government, and most of this small 4.4% gap is explained by occupational differences. Among federal executives, the pay equity gap—
Let me interrupt you and ask you, how does that compare to the private sector?
I don't have data
with
me from the private sector, but it's something like 56%. Which
So
is,
this is
quite
better.
different. It's drastically better.
I understand.
I was going to tell you that among senior executives in the federal government, the pay equity gap is just 0.8%, even though there are far fewer women in the SES than men, but I'm not here to represent SES. The market comparability gap, however, is far larger. The most recent pay agent report using BLS data shows the average pay gap still 33.7%. Although you'll hear critics say the federal pay system is antiquated and rigid, the only antiquated thing about it is that it doesn't produce extreme inequality between the top and the bottom. The rigid part has no truth to it at all. The current system was designed to close pay gaps on a local basis, and thus the law requires the government to measure pay gaps by city and provide a 2-part pay adjustment each year: a nationwide ECI adjustment and a localized adjustment. Once local gaps are closed to within 95% of the market, there'd be no more increases in locality pay. In the years since locality pay was enacted, little progress has been made in closing local pay gaps. That's why we're asking Congress for a 3.6% increase for 2020 to help raise federal salaries, so there'll be a positive factor in recruitment and retention. We ask further that the federal workers in the skilled trades who are paid on an hourly basis receive the same adjustment as their GS co-workers, and that Congress pass legislation to align the local pay area boundaries between the 2 pay systems, the one for salaried and for hourly federal workers. Regarding the federal government's process and policy for outsourcing government work, we ask that Congress extend the moratorium on the use of OMB Circular A76. A76 sets forth a cost comparison process for agencies to use prior to deciding whether to contract out government work. The flaws of A76 are quite serious and include systematic overcounting of in-house costs. The moratorium is meant to prod OMB to address the circular's flaws, but it also requires agencies to inventory their service contracts so that these enormous costs are no longer hidden in the budget process. Since neither of these things has occurred, fiscal prudence dictates that the moratorium stay in place. Finally, I'd like to address the administration's plan to abolish OPM and merge most of its operations into GSA. OPM's policy function would go to the Executive Office of the President. Both of these moves are ill-conceived and potentially dangerous. We've seen no analysis of the impact on operations, jobs, risks, or even costs or benefits. No good rationale is apparent, but a bad one does come to mind. GSA manages office space and fleets of vehicles. The administration, in its effort to degrade the federal workforce by turning all federal jobs into temporary positions with low pay, no rights, and few if any benefits, seems to see its workers in the same way, in the same terms as a fleet of vehicles. Lease them, abuse them, and then dispose and replace. If you think of it like that, the merger starts to make a strange kind of sense. We believe the merger poses a danger to the apolitical civil service. Moving the policy function of OPM into the White House is a blatant attempt to politicize the federal civil service. The administration has questioned the political loyalties of federal employees, and it's tried to eliminate, restrict, or otherwise undermine due process and collective bargaining rights. Abolishing the agency that has primary responsibility for upholding the merit system facilitates this agenda. Thanks for the opportunity to testify. I'd be happy to answer any questions you may have.
Sure. You talked about the moratorium that's going on. Well, OMB is. Are you aware of where OMB is at analyzing this? If there seems to be any progress, has there been anything made public about that?
We've had very little conversation with OMB recently, and as far as I know, no progress has been made.
And how long has that been?
Well, it was
how long is the
rewritten.
moratorium put in place again?
The moratorium has been in place for
Roughly.
6 years, 8 years, 6 years, about 6 years. The last time A76 was revamped was 1999.
Very good.
So these flaws have been apparent since the George W. Bush administration, when it was used very heavily. And in my written statement, I talked to you about the scandal at the old Walter Reed Medical Center that occurred as a result of a very, very long and expensive A76 competition.
Thank you. Mr. Amadei? Thank you. Thank you so much for your testimony.
Thank you.
Our next witness, Sean Moulton, Senior Policy Analyst, Project on Government Oversight. I'm reading these resumes, there's cum laudes everywhere. I'm reminded of the president of the Cook County Board once said to me, he was, thank you, Lottie, getting out of college. Mr. Stroger is well remembered. Thank you, sir, for being here.
Thank you for having me. Chairman Quigley, Member Amadei, I appreciate the opportunity to testify today. I'm a senior policy analyst with the Project on Government Oversight, which is a nonpartisan independent watchdog that investigates and exposes waste, corruption, and abuses of power. I'm here to talk about steps this subcommittee can take on two important issues: improving data quality for federal spending information collected and posted under the Digital Accountability and Transparency Act, or DATA Act, and improving the public availability of work done by inspectors general. It's my hope that this subcommittee will require agencies with poor quality financial data to file improvement plans and regular progress reports, that you will provide dedicated funding for oversight.gov, the central repository for inspector general reports, and will help create best practices for posting information about those reports. The Data Quality Act, the Data Act was passed to significantly expand and improve the government spending data available for public examination on usaspending.gov. But as implementation has moved forward, serious data quality problems have emerged. Inspectors General completed audits required under the Data Act of agency data submissions in 2017 and revealed widespread problems. POGO reviewed 41 of these audits, including 9 for cabinet-level agencies, and discovered that 25 agencies submitted significantly incomplete information, and 30 agencies, about 75%, submitted significantly inaccurate information. If the data cannot be relied upon, then the public and policymakers cannot use the information to draw conclusions or make good decisions. As the old saying goes, garbage in, garbage out. Given many agencies' poor starting point on data quality, we believe the subcommittee should take 3 steps. First, instruct agencies whose IG audits identify significant data quality problems to file public data quality improvement plans with the Department of Treasury and regularly report on their progress until data quality issues are considered resolved. Second, Treasury should report to the subcommittee on a semi-annual basis on the current data quality efforts by those agencies and recommendations for any additional steps needed. Finally, the subcommittee should also encourage the inspectors general to continue to audit agency implementation of the Data Act until the agencies have sufficiently addressed any outstanding data quality issues. The Data Act audits are just one example of the critical work that inspectors general produced, but not all of their work is so readily accessible to the public or even to lawmakers. In 2017, the Council of the Inspectors General on Integrity and Efficiency, or CIGI, established oversight.gov as a central repository for all federal agency inspector general reports, a major step forward for improved accountability of inspectors general and for public accessibility of their work product. Recently, this subcommittee provided its first funding dedicated for oversight.gov to CIGI. However, this effort requires a steady funding stream to continue its operation, improve functionality, and provide expanded services. We urge you to continue to support of a robust oversight.gov by providing at least $1 million in dedicated fiscal year 2020 funding to CIGI. We ask that this support be accompanied by report language that outlines some of the expectations for how best to use this funding. Congress should also request that CIGI articulate best practices for inspectors general on the publication and public notification of reports. Individual IGs do not have consistent rules for reporting on and providing access to classified or unclassified but sensitive reports. Even Congress could remain unaware of a non-public report, as there is no consistent method among IGs for how to make non-public reports known to Congress. The best practices guideline from CIGI should be modeled on current practices demonstrated by the Department of Defense Inspector General, which publicly posts the topic, the title, and the report identifier for all of its classified and sensitive reports. We have prepared suggested report language to accomplish all the goals I've mentioned, which I am happy to provide to the subcommittee. Thank you for the opportunity again to testify on these important issues, and I'm happy to answer any questions.
I appreciate you bringing up the Data Act, a rare victory for transparency in our world. A little tip of the hat to Mr. Issa was involved, the Transparency Caucus, Transparency Community, and I just encourage you and others in the community in terms of making sure, as you're talking about, that we move forward appropriate on this. If there's changes and additions that need to be made, that we move forward appropriately. Thank you. Mr. Amade.
Thanks, Mr. Chairman. I yield back.
Thank you so much for your testimony, sir.
You.
Thank you. Our final witness today is Rian Dennis, Legislative and Advocacy Specialist, Americans for Financial Reform. Thank you, sir.
Thank you, Mr. Chairman. And thank you, Mr. Amade, for the opportunity to testify before you today on behalf of Americans for Financial Reform. AFR is a coalition of more than 200 national, state, and local organizations who have come together to advocate for stronger and more effective oversight of the financial industry. Members of our coalition include consumer, civil rights, investor, retiree, community, labor, and faith-based groups. I'd like to focus my testimony on the importance of keeping poison pill policy riders out of appropriations bills. Unfortunately, our organization has had the experience of seeing destructive policy riders affecting financial stability and investor protection inserted into budget deals in conference committees or closed-door negotiations. A particular risk in the area of financial regulation is that legislation, which may seem obscure or technical to non-experts, can have dramatic negative impacts on the financial system in areas ranging from investor or consumer protection to protecting the public from another financial meltdown. This is a particular danger of managing such items of legislation through the appropriations process, where they are not fully vetted by the policy subject matter experts in committees and experts in public interest organizations that track these matters. The most dramatic example of this in recent years was in 2014 budget deal, when legislation was inserted that effectively eliminated the so-called swaps push-out provision in Section 716 of the Dodd-Frank Act. Section 716 placed a critical firewall between taxpayer-insured deposits and complex swaps dealing activities of the kind that helped cause the 2008 crisis. The Section 716 firewall would have prevented the mingling of the riskiest kinds of swaps dealing activities and the activities of the taxpayer-insured depository bank. Such activities could still be continued, but would have to had been segregated from deposits and independently funded, a change that would have prevented big banks from benefiting from taxpayer subsidies in this segment of their business. However, Section 716 never went into effect because it was eliminated in the appropriations process at the behest of major swaps dealing banks such as Citigroup and J.P. Morgan. Language effectively gutting this firewall was placed into the budget deal. Press reporting demonstrated that the language placed into appropriations bill was actually written by Citibank lobbyists. Lobbyists had previously tried to pass this legislation through the normal process but had failed. The firestorm of negative publicity that ensued when the public realized that legislation of this significance had been placed in the appropriations backroom demonstrated that they could not have succeeded without taking advantage of the appropriations backdoor. Unfortunately, this kind of gaming of the appropriations process was not an isolated incident. Just last year, a provision was inserted into the omnibus to benefit business development companies, which you can think of as a kind of private equity fund sold directly to retail investors. This provision allows BDCs to double their permitted fund leverage from the current 1-to-1 level, $1 of borrowed money for each dollar of investor equity, to 2-to-1. BDCs are already the beneficiaries of regulatory exemptions since conventional closed-end mutual funds can only leverage 1-to-2 or borrow $1 per $2 of investor equity. This increase in permitted leverage will boost returns to the managers of the funds, but represent a massive and unjustified expansion and risk to ordinary BDC retail investors, particularly since this fund-level leverage is in addition to the leverage that already exists in risky BDC portfolios. This is not a provision that could have been passed in the light of day. In fact, the BDC provision was so unjustified on the face of it that the lobbyists were unable to insert it even into the highly deregulatory S-2155 legislation, which passed last year. AFR considers it critical that the new leadership of this committee close that back door. It is entirely inappropriate to insert complex technical provisions that create massive benefits to industry into a must-pass appropriations process with limited, if any, debate, public visibility, and expert vetting of the public interest considerations. In sum, we urge you to resist adding poison pill financial services policy writers in any appropriations bill or omnibus packages passed through this committee. The appropriations process should not be an opportunity for Wall Street to supercharge its insider advantages to sneak through dangerous measures that serve their narrow interests while putting the financial and economic security of the broader public at risk. Thank you.
Thank you, sir. Your message is delivered. I encourage you and your organization and all others to stay involved as the process begins for another cycle. We certainly appreciate your interest. Mr. Amade?
Thanks, Mr. Chairman. Mr. Dennis, I hear what you're saying, and it's like, well, so who's not for that? You know, I'm sure you probably have a list, but anyhow.
I actually do.
I guess here's my question. In my experience, it's not like there's a huddle with most of the members going, okay, how are we going to upset the policy committees? What are we going to yank from? I mean, there's a rule against, hey, you're legislating in an appropriations bill. So absolutely, you've cited instances where, hey, guess what? They legislated in an appropriations bill. But in my experience, if you're trying to do that, somebody goes, hey, wait a minute, and one of the somebodies is the committee with the policy jurisdiction. So are the instances you're citing, I'm assuming, that either that committee didn't say time out, or the committee said time out and leadership said time in. Is that correct?
Exactly. Most of these, especially last year, that was put in during the conference committee, so it was after it had passed both houses.
Okay, so I'm not going to ask you the hard question, which is, so is that a Senate problem? Not that they watch these things, so nobody will know I said it. So I guess the message is there's no cooking like home cooking, huh?
Well, I would say I think now with the change of the leadership with this House, I think you all have a much stronger voice in your negotiations with the Senate, and so we're just asking that you all use that.
Well, and I appreciate that. As a guy closer to the bottom end, closer to ground level than up there wherever the planets travel, I can assure you that I had no voice with either one, but on that happy note, I'll yield back, Mr. Chairman.
And I appreciate that. Sir, thank you so much for your testimony. I want to thank everyone for their testimony today. We appreciate, and I again encourage you to stay involved in the process and stay in touch with all of us. Before we adjourn, I ask unanimous consent for the written testimonies submitted by our witnesses who appeared today to be included in the record, and for the following additional testimonies. Number 1, Consumer Reports. 2, Fix the Court. 3, National Coalition for History. 4, National Congress of American Indians. 5, National Treasury Employees Union. And finally, 6, Project Management Institute. Without objection, it shall be. Thank you so much. We are adjourned.